That brings up an interesting point here, Andy. It really, 24 was eye-opening in many ways, but one of them was that, I mean, come on, we had nominally at least, record all-time high after record all-time high, monthly closes, what was it, 8 of them at
Mhm.
record all-time highs for gold. And many of the stocks did nothing, just couldn't pick themselves off the floor. Um, and that's basically never happened before. When you've got the metal, the underlying metal, and this isn't unique to gold, but any commodity like this, why do we even bother with these crappy mining stocks, as Doug Casey likes to call them, right?
Mhm.
Because they give us levers to the underlying metal. And if they're not going to do that, why would you take that risk? Just buy the metal. So it was a real eye opener that we really ought not to dismiss. Anybody, from newcomers to metals and mining to seasoned professionals, the market sent us a very unusual and clear signal last year. And so I find myself interacting, particularly with the veterans, that like, oh, the rising tide eventually lifts all ships. Well, it didn't in 24. That doesn't mean it won't. Like if gold hits an actual, at least according to CPI, all-time high, we're looking at 3,500 almost. I mean, within a couple bucks at 3,500 at the moment, according to the BLS. I think that would obviously provide a big tailwind. I think the headlines would be gonzo, and I do think that would create a lot of interest. But we actually had that in 24, and a lot of these stocks didn't respond.
Right.
So I just think, maybe they do this time, but maybe they don't. Do you really want to bet the farm on something? Okay, historically, that's been the way it's played out, but we just saw that it didn't this time. So long story short is I'm seeing this very much as a stock pickers market. So I'm very bullish on gold. I'm even more bullish than I was a couple months ago, but I'm not buying an ETF. I'm not buying the GDX or the GDXJ, which is a misnomer. I mean, they're not juniors. Right. And even amongst the juniors, the rising tide has still not lifted all ships. There are some out there that still can't pick themselves up off the floor. That's telling you something. So the better stocks have done and did do better than gold in 24. So I think we can outperform simply by avoiding the worst stocks. And some of those are pretty obvious.
I couldn't agree more. And I say that just an example. Recently, I bought a company that was in the beginning of the year and they didn't get a bid. And great run, great assets in the ground, blah, 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 blah. Decent jurisdiction, but I feel like I'm being compensated for the jurisdiction. That being said, they didn't go up like the other ones did. So I couldn't agree more. I don't think you can just buy the market. I think you
Yes.
have to buy the market with good name. That's what I think you have to do. So
Yeah. And especially, and people say, well, gee, Lobo, aren't you nervous being a bull at all-time high prices? Well, if I was just saying, buy, 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 hitting that big red button that Kramer has on TV, right? Buy everything gold. Yeah, I think I couldn't do that. I would feel very nervous saying that. Whereas if I'm saying there's an opportunity here for stock pickers to place bets on the better operators or the better, the people that are actually building the gold mine, they've got the permits, they've got the money, the shovels have already hit the ground. They're actually adding value on the ground real
mhm.
time, right? Or the juniors that actually have a discovery of merit that this could be a mine. It looks like a mine, right? I feel much less nervous about that.
Yeah, got it. So hey, let's talk about copper. I'm embarrassed to say I somewhat missed this recent move up. But I've been a very long-term bull.
Dude, you shouldn't be embarrassed. That's almost a badge of honor. Nobody can time a market bottom.
Right.
So and really the move we've seen though so far this year, I think has more to do with geopolitics, Trump's tariffs and things than the actual fundamentals shifting. We
Mhm.
actually have seen the resolution of some of the bottlenecks on the supply side. We've seen some big deals on the copper supply side. I don't expect it, but it is possible, especially if Panama got their act together. But we could actually see a rebalancing very near term that would be bearish for copper prices,
Yeah.
bullish for the industry, but bearish for copper prices. But we also have, Trump's tariffs and who knows what. So um, I don't think you did anything wrong. If there's um,
Thank you, because I do have a thesis, but I didn't tell you, and this is what I tell myself and anybody that ever asks for my opinion. It's okay to miss the first move. In fact, it's often very normal, but you want to hit the second move because everybody jumps in on the first move and then you have a recorrect. So I'm actually hanging out waiting, but I'm very interested, very, very bullish on copper. And I'm glad that you share that opinion as well. And I want to push on that, meaning work that out for me. Why are you so bullish on copper? Why is that your favorite pick this year?
So as I said earlier, I mean, it basically my outlook is inflationary. So that makes me bullish on all commodities as a
Mhm.
class. But there are some that are facing, very strong headwinds. The problems in nickel space are huge. I mean, we've got Indonesia just pumping it out like there's no tomorrow. And so even if we have an economic rebound, even if, the money helicopters fly and we have more inflation and so on, the supply is so huge there that that might not be enough to lift the nickel ship along with everything else. And lithium's even worse. Um, in Argentina, I just saw a DLE plant, a direct lithium extraction plant that the locals told me was making money hand over fist. And that's really striking because this is new technology that's really being applied commercially. We've seen it coming. We've been writing about it. Yeah, show me, don't tell me, right? It looks like, the French are in the process of showing us right now. And that's really huge because the cheap way to process lithium, sorry, just real quick on this. The cheap way to process lithium has been for many decades. You build an artificial lake, line it with plastic, put your brine solution out there. The sun does all the heavy lifting for you, evaporates off all the water. You scrape off your lithium salts and clean them up a bit. So really cheap, low cost. But to build that artificial lake, it's a couple kilometers long, right? I've seen pans 5 kilometers long. It takes a couple years for the sun to do that work for you. It's free, but it's slow. Whereas with DLE, you're just pumping, it's like an in situ uranium recovery plant or something. You're just pumping it straight out of the ground into your plant and getting the lithium out now. So if that's working, there are a lot of assets out there that this could be applied to. Meanwhile, the Chinese have been boosting production. There's just lithium was never rare. It was a production and bottleneck issue. So even if the economy rebounds and even if people decide to buy EVs like, they're going out of style, which they kind of are, maybe.
All right.
But let's say that the EV market just booms this year, right? There might actually be more than enough supply.
And
So I'm not indiscriminate. I'm still looking at which things are actually going. And this is the other answer to your question with copper. I talked about, inflationary is good for commodities. I talked earlier about copper hadn't done quite, a hockey stick anytime recently. So it had more upside just on the basis of price. And then there's um, the structural supply constraints. And it's not like lithium. It's not like nickel. It's not like some of these others. This is one that, even if the low hanging fruit this year manages to balance the market somewhat, I think that's a worst case scenario. I'm not actually convinced that will happen at all. My base case is actually that we'll still see supply shortfalls this year and prices, higher on that basis. But if that does, it's very short term. Now, to the way we started this with, and that's all the more reason not to beat yourself up over not having bought the bottom here. Because between who knows what will happen with the tariffs, like maybe Trump cuts a deal and there's nothing on copper, then all that scare goes away. And to the degree that that jacked up prices, in the first month or so of this year or two, right, that goes into reverse, right? And suppose, some of these other developments I've talked about on the supply side, suppose, it takes a while, but suppose Panama even just announces we've got a new deal and we're welcoming our copper miners back, right? That would hit spot prices immediately.
right.
I think there's plenty of turbulence immediately ahead that makes a disciplined speculator say, you know what, maybe there's a bargain hunting opportunity here. And bottom line, let's say I'm wrong and there is no, that was it. That first move that you talked about is done and now you don't want to miss the second one. Let's say that's it. If that's so, we're looking at a multi-year, really multi-decade structural supply constraint in copper. The copper just isn't there. I mean, yes, at higher prices, some lower priced or lower grade deposits might work, but they're not built yet. They haven't even hit shovels, right? So, and if they do work, they'll be higher cost operations. So it's not like high prices will cure high prices. In that case, high prices will just rescue a few stranded assets. So the bull thesis here is, I think, is so solid and so enduring that I frankly couldn't care less about where the bottom is. Let's say, it's wrong. I've missed it already. It's going up from 470 and it's just going off from here. Well, with the years ahead that I expect to be able to make money on copper, I'm fine with that. When that's obvious, I jump on the train. Okay, it's already left the station. I've got a fast horse.